My next guest has published her 2026 mid-year outlook, which states that tailwinds are in the rear view. Oh, boy. All right, let's bring in iCapital Chief Investment Strategist, Sonali Basak. And, first of all, I love when you come out with your new stuff. It's always great. All right. Let's talk about this, though, because we got this momentum, but you've got potential speed traps. Already sounds ominous.
It doesn't need to be so bad. It does not need to be so bad. We're expecting between 0 and 5% appreciation, middling growth in the S&P 500. What's going away? You're seeing the AI trade get more complex, a lot of scrutiny in terms of some of the spending you're seeing. You're seeing fading consumer tailwinds, of course, a lot of pressure from the higher for longer inflation.
What about oil, though? Would that kind of counterbalance? Could that be a gust or, at least it's not a headwind anymore?
For now, we think that you still have to see that inflation pass through, but we do think in the next quarter or so you're going to see inflation peaking. And so we do think you'll get that boost, but maybe not right now.
Let's talk about the market then, stock market. You've got a range here we're looking at for the second half of the year. Bull, 8,200, bear, 6,700. More like middling here, what you're saying, just kind of steady as she goes.
Steady as she goes, and so that is our base case. 7,500 to 7,900. However, look at the tails. I think that's important. What are we really saying? Expect volatility for the rest of the year. You have midterms coming up, so a lot of people are going to be paying attention to the fiscal. That might play into the bond market. Keep an eye on those risks.
Historically, we get these midterm sell-offs or pullbacks. But the rebound has been phenomenal. People kind of give up in those last couple of months after the election. There's some pretty good snapback.
You have to look at the pullback opportunities, right, to buy in. I think that, if anything, that's what's a little exciting about the volatility that's coming to the surface. But we would say that a lot of people are playing this through single stocks and not always through indexes, given the run-ups that we've seen.
Let's talk about the hyperscalers for a moment, because everyone's, listen, they're somewhat controversial. So free cash flows, that light blue line, it's absolutely diving. I saw a chart the other day that goes a little further out than yours that suggests free cash flow is going to rebound significantly after they get through this investing phase. What does that put these stocks in terms of investability?
Well, first of all, most of them have lagged the market already. And so perhaps a little too much. I don't know why they've been punished, them and the financials, as much as they have in this much of a growth environment. With that said, all of them are different. The meta news that you were talking about just today, they have to prove themselves out. Even though it's an exciting prospect, it doesn't mean that they're going to gain from it right away. You can see why Amazon and Google people are so excited about. As people move away to lower inference costs, you're seeing a lot of excitement about the possibilities for Amazon and Google, and yet you have not seen the same run-up you've seen in the infrastructure plays.
Semiconductors, absolutely on fire. I just had a guest who still likes semis. These aren't necessarily household names, but it doesn't matter. Could there be a point where this hyperscaler stop spending every nickel they've got and they start to benefit maybe at the expense of semiconductors?
As long as the capital markets stay this open, you're seeing equity, debt, private market fundraisers to the tens of billions of dollars. As long as that keeps happening, you can still see more spend. However, at some point, it might start to plateau, especially as you see more discipline being created in the spending plans without that ROI. Token costs, by the way, potentially declining. Can change
we get the Javon's paradox thing, though. They decline, but the companies spend more money anyway.
We'll see. I think a lot of people are looking at the spend and saying, well, wait a minute, can I look at the entire workforce here and say, where is it that we should be spending on one type of CapEx, one type of hiring versus tokens in and of itself? I think AI, everyone thought it would save everything. It would create intense productivity. What we're seeing now is that's not the case.
Well, yet. Can we say not the case, ... yet?
It's not the case.
Okay, you don't think it's going to change a lot. What won't it change?
What won't it change? I was talking today, somebody hiring at an investment bank, hiring history majors once again, hiring liberal arts majors once again. And people need trust when they're thinking about things like investing, doing deals, and anything that would put a lot of money to work.
So the human element is, ironically, might be the greatest asset for humans.
I think so. Maybe
to push back against AI can't take your job because the human element can't be replaced to that degree.
The same investment bank CEO said he's hiring the same number of analysts this year, just a different type.
Wow. Real quick, yields. This is a pretty wide spread. Look, 4.8 on the 10-year, 4. Listen, I don't think the Fed. I don't think Warsh is hawkish. I know a lot of people think he is. I think he's communicating against the backdrop of established parameters. But once they bring in these task force and they rewrite the rule book, I think next year he's going to be extremely accommodative.
I'm excited for the rewrite, by the way, of
Yeah.
the rule book. But yeah, if you think about it, rates on hold, probably not hiking. If anything, maybe cutting if we can get inflation peaking enough. But on hold means that you have base rates, you have elevated inflation, even if it is peaking,
Right.
and you have the term premium, which means that you have a pretty meaningful range in the longer end of the yield curve. And any potential hiccups in Japan and the UK could spill over into the bond market in the US as well. So we're keeping an eye out for that, because if you see a float up in yields again, then you have that spillover into the equity market. So it's worth keeping an eye on.
Yeah, worse, actually, to almost paraphrase you, or vice versa, he's saying we're all connected, and any misstep anywhere can impact any country, any economy, everywhere.
Absolutely.
Great stuff, Sonali.
Great to see you.
Thank you so much.
Thanks for having me.
All right, folks.